Welcome back to another episode of the Comstock channel. My name is Brianne Hendrickson, and today I have Justin on with us. Welcome.
Well, good morning. How are you?
Good. How are you?
We're doing all right. A little chilly here, but moving forward for the week. Heading into the weekend, it's supposed to be quite a bit better next week. So looking forward to that.
I bet. Thanks for being on. And on this episode, we are going to be talking about weekly export sales and some highlights that you have seen. Corn is going to start us off first with a marketing year high with 75.9 million bushels. Were you expecting that? Was that above average?
Well,
Where are you?
Yeah, that was quite the surprise today. We know we are competitive on the world market, but that's up 35% versus last week, 54% versus the 4-week average. We need to see some demand pick up. The USDA has exports increased. We also have, feed usage increase, things like that. Ultimately, at the end of the day, we need to continue to see these exports pick up. And I included that slide there that you just put up. It's just a reference point to where we're at this year versus the 5 year and last year. Hopefully moving forward, we have corn up a little bit here today, probably mostly as you talked with Joe yesterday about first notice day, starting here today. But in general, good sales. Hopefully moving forward, we can continue to catch those sales. We talked earlier, I feel like I'm always the export guy, but we talked earlier in November about, how we were lagging in those sales. Sales have actually been pretty fair this year, considering all the issues on the Mississippi, the Illinois waterway delivery system, and the Panama Canal. So, if we could get those problems corrected, maybe we could surprise ourselves and catch a little bit of higher export number, and anything we can do to chew into this carryout would be a welcome surprise.
Kind of related to corn, the EIA stocks report came out. What did you kind of see there?
Yeah, it did. So, you're looking at a USDA number over 5.3 billion bushel uses for ethanol this year. EIA number came in slightly under last week. Not a huge deal. Looking like we need to keep this pace. Can't see that slack off. We saw gasoline demand decline last week to 8.2 million barrels per day versus the prior week. That's the lowest in 8 weeks and about 1.3 below last year. So ultimately, we need that gasoline demand to prop up the ethanol. There's no huge concerns here on the ethanol grind for me. A little bit of margin there yet. I would anticipate that moving forward. We have the OPEC plus countries meeting, trying to decide where they want to put output at. We've seen the crude oil market trade huge swings today, $2.50, $3 swings from the lowest to the highs. So moving forward, it's not super bullish on the gasoline demand, but pretty early to put up a flag on that. So I guess I'm staying cautiously optimistic. Again, when we look at the total supply and demand, we still need to find something to chew into these bushels. We have export numbers that were good, maybe get a little bit better. We have an ethanol grind that's probably on pace, and we have an export program that's, again, okay, but we need to find something to use these bushels up, whether that's feed, less acres, poor crop in South America, pushing more business here, which could happen. We can get into that once we get to soybeans. But just in general, not bearish numbers, but not super bullish, in my opinion, to cut into the carryout where we need to move prices higher or cause a large fund short covering rally.
Let's switch over to wheat before we get to soybeans.
Yeah, as we've talked all year, the wheat market has been just a dog. It's going to be tough to rally corn. I know Eric has said this, and multiple people on the podcast have said this. It's going to be really tough to rally corn without a wheat story. We did have solid export sales today at 22.9 million bushel, highest in 6 weeks. Starting to hear some rumors, possible up to 1 million metric ton of wheat not being able to be food grade, having to move into the feed market in Australia with the heavy rains down there, potential problems in Argentina, starting to get slivers of hope on that. We've heard there was a report earlier in the week Russia may limit their exports on wheat to kind of control their domestic stocks, but we need those slivers and we need those stories to materialize. If we could get a wheat story, hey, now maybe corn can follow along. But with a huge fund short in the wheat and the corn, we need to get something to get those guys to step up and cover.
Soybeans are 97% higher this week compared to last week. And even this morning, they had a flash sale to China.
Yeah, awesome news on the beans. To me, we look at this bean market, we sold 1.895 million metric tons, about 70 million bushels. Huge increase. We were lagging a little bit in the soybean sales. You have to like the fact that China is coming to the market. You have to like the fact that they bought again today on a flash sale. The 6 to 11 day weather forecast just released for South America. The bias is for drier weather. I do think as these stories kind of materialize, China doesn't want to be caught short-handed, so they will have to step up and make some purchases. Hopefully, we can continue to get those sales out of the United States and not out of Brazil. And if that weather story does develop, we have seen yield estimates from South America, particularly Brazil, from the 162, 163, all the way down to well followed Dr. Cordier down to 158. I've seen some private estimates even lower than that. So already at this point in the game, we're saying the crop is as good as last year, probably best case scenario. The bias is leaking lower. How much lower, we'll have to continue to see as we go through the month of December. But at least it looks a little bit positive on the bean side of things. Running into some technical things, keeping a lid on the January beans right now. But if they have a reason to cover those or we continue to get these sales, I would anticipate that maybe moving a little bit favorable.
Let's kind of talk about China because, I mean, there's a lot going on. You sent over a chart.
There is a lot. Yeah, there is a lot going on there. So just through this one up from the USDA, showing where everybody's, showing everybody where it's at for the year. There is room for them to make additional purchases. If you look at last year and the 5-year average, I would anticipate those continue. If we see these flash sales continue tomorrow into next week, would expect that gap to narrow as we move forward.
So let's switch over to livestock. Starting with beef, they were down on exports 37%. I don't feel like they've had a good week.
No, cattle have had a tough week. Yes, the first 2 days or the last 2 days were a little bit optimistic on the cattle market. Getting beat up again today. We got the April cattle down another 225 here today, giving back what we put on earlier this week. So, as I talk to my clients, I'm looking at this market as a whole. We have corn and hogs, the same fundamental storyline. Too much of them, need to get rid of it. We have beef and beans, tight on carry out on the beans. Beef, cattle on feed put through a little bit of wrench in that in October, but as a general rule, we continue to liquidate this herd. So I kind of put beef and beans in the same category, pork and corn in the same category. The beef side of the things, we only sold 6,300 metric ton this week. Again, like you said, down 37%. High prices cure high prices. Obviously, we haven't seen those foreign buyers show up, and at these levels, I question whether or not they will show up. But do we really need to export the beef? That's up for debate. We'll see as we get into the February and April contracts on the live cattle to see where the gauge is. So far, the boxes have been holding relatively steady, just under $3 or $300. So we hopefully find some packer footing there after we get through the holiday season.
Let's finish out with pork, also down. They are not catching a
Yeah,
break.
wheat. They are not catching a break. Week exports today, 21.2 metric ton. That's down 20% versus the 4 week. I, you know, that chart that you just put up actually isn't horrible, right? We're tracking along where we've been the last couple of years. We just got too damn many of these hogs. We continue to kill 484 to 485,000 a day. Weights are up. I'm hoping for something to pop through. I don't know what that's going to be moving forward. I'm struggling on the hog market, as all of our producers that grow hogs are as well. So hopefully we can get some price higher so these guys can lay some hedges off. But until we do something about the supply side of things, that could be a tough road to hoe.
So overall, how do you feel about all of these numbers coming in?
We look at these numbers coming in, we're in a huge carry market. Joe talked about the delivery system. Generally, carry markets are meant to be sold on grains. I guess when I had some conversations this morning with clients, west of the Mississippi, you have fabulous bases. Get some offers in if that, where you're comfortable in marketing some corn. We may see a quick pop up, another 10, 15 cents, put you in that $4.95 to $5, depending on your local basis. But get those targets in. East of the Mississippi, you're going to need some more export demand to chew away at that basis, or continue to just hedge the carry and hope for that when we get there that the basis gets better on a hedge to arrive or just a straight futures sale. Looking at the beans, a little bit of different deal there, but we've tested those highs a couple times now, have not been able to get through the $14 mark. Again, looking at people that are going to need cash here after the first of the year. If we do see a spike up, might not hurt to look at getting some beans priced on that. And we can talk individually on that. It's kind of a more of a tailored situation, as a larger percent of the beans have moved during harvest than corn. Farmers are sitting on a significant amount of corn right now. Moving to the livestock, that cattle market, everybody's living on a prayer, hoping we get a rally back to get some hedges off. Again, it looks optimistic. The herd, once we get through these larger cattle and feed numbers, the placements are expected to be lower. But if there's an opportunity to lock some profit in, we do have the LRP and we have puts and straight hedges. So definitely give us a call on that if there's something we can help you with. And the hogs, I'm still down on the hogs, but trying to remain optimistic that something will change.
All right, that'll do it for this episode. Thanks so much.
Sounds good. Thanks, Brian.
Want more premium content? Subscribe to the Comstock Report, where you will receive 2 reports daily. Want more video content? We are on Facebook, YouTube, and now TikTok. So don't forget to like, follow, and subscribe.